Municipalities make money from plan approvals, and in most provinces, the revenue collected between January and July 2025 is down relative to the same period in the previous year. FNB economist John Luce says the latest data suggests the construction market may have stabilized after sharp declines last year.
And if you take the residential numbers, 1.75% down for the 3 months to July year on year compared with compared to the comparable 3 months of last year, and still about 50% down on pre-COVID times, the comparable period of 2019. So although it's come back to building plans passed have come back to zero, and there has been positive growth in completions, the plans passed is obviously indicative of what's to come. It's not a wonderful picture. It looks like, at best, the planning activity is stabilized. 1.75% year on year down is more or less zero.
Luce notes that when interest rates were high, declines were steep. On a provincial level, the two provinces hardest hit were Gauteng, down 31.9% year on year, and KwaZulu-Natal, minus 24%.
Western Cape plus 24%. We've seen the Western Cape having much faster house price growth in recent years, which suggests that demand exceeds supply in that province. In other words, there's more of a shortage of supply relative to demand, and better returns on property for investors is like one would expect to translate into more investment in new stock. And that seems to be what's coming. So shortly after the interest rates have started coming down, we've started to see growth in building planning yet again, significant growth in the Western Cape, but not so yet in Gauteng and KZN, where the returns on residential property are still relatively low.
With the positive sentiment on the sector and near-flat numbers in the first half, Luce remains positive that the second half data will show a rebound and growth in line with the positive GDP numbers and slowing inflation. Nosipho Khatebe, SABC News, Johannesburg.